Hold the mock mini book for a second. Page 299. At what point should you cut a loss? Um, this is kind of tied to last time. Last time we talked about losses are a function of expected gain.
Mhm.
How you have no control over how much your stock goes up, but you can control risks, right? How much you can lose. So here is talking about, your maximum stop loss depends on both your battling average, right? Percentage of profitable trades and on
Mhm.
your average profit per trade expected gain. So it's like he always use this example like in baseball, right? They like how many times they can hit the ball and how many times they actually like can get onto base, right? So when you know your batting average, right, then you can adjust your risk in that way, right? So if your balance average is like, let's say, I don't know, 30% is pretty high. Let's just say 30% you can hit the ball every time, and then you can get onto the base. Um, that's pretty good. Like, that's probably like pro statistics. So that means you know that 30% of the time you can make a profit, right? And then you look at the size of your profit, like are you hitting home runs or are you hitting one base or two base or even three base? Like you kind of look at that and then you adjust right where you should also take your profit. So that's kind of very important. Um, he also said here like
Mhm.
assume you are profitable 50% of your trades, which is pretty high. Um, then you on average must make at least um, you know as much as you lose right over time.
Yes. Mhm.
Yeah. So right in order to break even, right? But that's pretty hard to do. So that's why you know and it says here, after you have calculated these numbers, you'll be able to get a much clearer picture of where you should cut your loss. A rule of thumb could be to cut your losses at a level one half of your average gains. So that's a very important point. Like, so it's like if you're making 5% on average on the ones that you're making profit, then maybe you should cut it at 2.5%, right, for your losses, right, to make up for that. So again, it comes back to I think we talked about this before, like the ratio of like it could be one in this case 1 to 2 basically. So you risk half of what you can gain, right?
Mhm.
Um, you know, um, so for smaller, I think for beginner, that's probably at least you should do that. But as you get more advanced, you can like do 1 to 3 ratio, 1 to 4. Like even basically, the higher you go, your risk level becomes smaller and smaller, right?
Mhm.
The problem with this, is that obviously, um, you know, the way I have most trouble is like I don't do this. Like I don't say, oh, every trade has to be 2.5% stop loss, right?
Mhm.
Or 3 or 4% or whatever, because I feel like every stock like trade differently. So but again, what he's talking about is like your average, right? So if your averages are like I say making 5% only, then you really can lose more than 5%, right?
Yes.
So it's even though you like because he already said before that uh on average, right, like the maximum stop loss you should have is like 10% maximum. But it can go as little as you want, right? So you can't really lose 10% is what you're trying to get if your maximum gain is five
Yeah.
percent. Even if your maximum like if your average gain is 5%, you can't really go 5% as a stop loss because then you're only breaking even at best if you're even 50% correct.
Mhm. Mhm.
So I think that's very important to remember because um, we tend to forget that. And so like for example the last 2 weeks I think I got beaten pretty bad. Not because I didn't have stop loss, but I think like my stops were much higher than I wanted it to be.
Mhm.
So instead of like just give you a rough number. Let's say instead of like 2-3%, I gave it 4-5%, right? Which is not not good because you're gonna get stopped out 4 or 5%. That means you're losing 4 or 5%, right? So, um, you know, and so when the market didn't perform well, you're gonna get hit on those stops, and what can you do? Like at least you get out, but my point is you could have lose less. And so that's the thing about like being wrong, right? Like we will be wrong no matter how many times we trade. Like that's why that batting average is very important. Whether you write 50% of the time or how many percent, right? And then you have to figure out how much you want it to lose, right? Like when you're wrong. So to me, that's where the professional levels are. Like when you start thinking like that, this is like how the pros play their trades, right? Um, you know, of course, on hindsight, um, we are still in a bear market, so you won't make big money in the bear market. Is all I'm saying, right? Um, they talk about how in the bear market it's hard to make big money. Not only that, um, how do you say? Yeah, like let's talk about in a bull market. In a bull market, you could be wrong in your time entry, and you can still make money. Like what that means, like for example, you buy a stock extended, like from the buy point, and even though you buy it higher, it won't come back down and hit your stops because maybe the market is so strong that even you buy, let's say you buy it at a higher price, which usually you shouldn't, but you still can get out of it okay or make money from it because in a bull market, that's what it does usually. It just keep going higher and higher, right? So that was something that was mentioned in IBD that uh, you could be like wrong on your time entry and still make money in the bull market. But in the bear market, it's the opposite. You almost have to be like, um, you know, buying on a low price and selling it even as soon as it hit a new price because it's a bear market. So that's the difference, right? Um, and so yeah, we'll talk about this in a second here. Like Jim Roppel just did a video with IBD live on lessons of 2022, and I think some of the things he mentioned like as a summary was really good. Um, and yeah, so we can jump to it right now. But any other question about this point? Um, at what point should you cut a loss?
No, sounds good. Yeah.
Yeah. So I think that's very important. Let me just type that in here. 1/2 of your average gains. Like I said, this is like a very bare minimum. Um, so so that's why like it's very tough, right, in the bear market because you can't like I know everyone's like especially people who follow IBD like they even talk about this. Jim Roppel mentioned this is really bad year for IBD style investors. Um, but at the same time, he's saying, which is very interesting. Is like if you follow an IB style, you know that it's not working, right? So yeah, you lose some money, but you're not losing a lot, right? He's saying like yeah, you can you try here, it fail, try here, you fail, like yeah, you lose. Right? Again, everyone loses, but if you follow that and you don't let it sink, like because IBD is usually 7 to 8% stops. So even if you lose, like let's say I don't know, 10, 20 times this year, it still won't hurt your portfolio, right? Depending on how much you like how you weight your position. But whereas people who had this year who didn't follow those rules, um, they get hurt big, right? And so I'm a culprit of that too because so I didn't let go some of them early in the year. So that everyone goes through this state, right? Like we all make mistakes. It's okay. We learn from it. Just remember it. And this year is not. It's also and we'll talk about recent actions. It really market is just punishing anyone who trying to make any long term plan right now, right? Like the moment you think of any, like it doesn't even matter if you're bull or bear, you get punished right now if you're trying to think long term. That's how choppy this market is. Like it's crazy, and I'll share my thoughts about what could possibly happen in the coming few weeks. I don't know what will happen in the new year for sure. Most likely will down. Like that's where most analysts are going. They'll probably go down in the new year. But at least for the next 2 weeks, like I'm interested to see if there's a bounce here. Uh, but a lot of people say it will continue to go lower. Even Jim Roppel thinks it will go lower. Um, and Eric Johnston thinks it'll go lower. So a lot of analysts are very, very bearish right now. And and because liquidity dries up in the holidays, it's possible it could go lower. Because there's just no liquidity, right? And no one wants to, knowing January, things are not going to look good fundamentally, at least from a company earnings perspective, that people are really giving up. But again, I always say, right, psychology is very important in this marketplace, and it shows on the actions, and again, we'll dive into it right away. But I just want to quickly talk about Jim Roppel's what he mentioned, because I feel like that is a very important thing to summarize before we dive into the recent action. So he said, we are in a bear market, very choppy. As soon as there's a bull market, you go long, right? Like you don't need to trade because he's not a trader, right? He always say this, as soon as a bull market takes, he's going to try to position into like a few key stocks that he think is the leader. And so he started talking about um, true market leader, right? How to find them. And he did a study, I don't know when or where, how he did it, but he said most true market leaders are run for 98 weeks, which is roughly slightly less than, I think, how many? Let's see, 98 divided by 52 weeks, right? So yeah, 1.8 years. So roughly, 1 year and 8 months or something, right? That's the average run for most true market leader. And he mentioned, like, he gave lots of examples of true market leaders over the last many years, and he talked about how long the duration is, and also how much gains. Most of them run up easily, like 20, 80 times, like 20 to 80 times in that 98 weeks. Like, so in 1 year, 8 months, you're making 10, 20, 30, 40, 50 fold on your money. Uh, and he said that even he didn't catch all of it, but even if you catch part of it, right? Like, 2, 3, 4 times is pretty good, right? In that time frame. So, um, so he also talked about how, so he always have this mentality, which is very interesting. Like, you always follow the market action. We're in a bear market. You don't want to take too much, meaning like positioning should be very low. Like, like he always say, he's like the highest you've been positioned is 30%. The lowest is like 0%, right? So most of the year he's like between 0 and 10%. And even those little trades that he do is mostly on, things that are more short term, right? So, but for long term, like what happens is that a lot of people right now, it's a bad year. Most people lost money, and also people are getting more and more bearish. These are signs of a bottom, um, and so when market turn, and he talks about this, when the market turn, and those leaders you think will be leaders, they're gonna jump like fast, and they'll jump like easily 20, 30% in like a week or two, and you will think that, hey, I'm gonna sell because I'm gonna take my profit, right? And he said that the moment the money is become easy, most people will be so frightened that, hey, this is the first time I make 20, 30% or even more in like such a short period of time, I'm gonna sell. And the bull market actually started, and that's when a lot of people sell early and won't catch on to those leaders, because usually after they sell, they're like, I don't want to buy it back, right? Until it fall back, right? But the thing is, when a bull market starts, those guys are not going to fall back, at least not that much, right? So he said that a lot of people make that mistake. So meaning, like, during the bear market, they lose, because they keep trying, right? And then finally, for example, M phase, we always talk about this. You buy in, you think it break out, and then it fell again. It breaks out again, it fell again, right? So after 4, 5, 6 times, in 2022, you feel like, and of course you're still trading, but the next time it actually break out and make 20%, you're gonna sell, and then that's the beginning of the bull, right? So he said, be careful of this problem, because a lot of people make that mistake every time a bull market starts. So I feel like he's right. I feel like the next time the end phase is gonna break out to 20%, that's the new run. And he said it's not just one leader, right? You're going to see a few leaders, many leaders actually. And then he also talked about like in the bull market, initially the few leaders will break out, and then more and more leaders each week after that will continue to break out, and that's how you know the bull cycle has started, right? So that's why for him, he always and because he learns from Bill O'Neill, right, who's the founder of investors.com. He said that Bill O'Neill will always buy when something breaks out, especially a leader, regardless, right? Even if it's in a bear market, and like not high though, not high position, just to test the water, right? Um, and he does that too. And he said that when you do that, and you start seeing more and more leaders breaking out, and as you get into it, and Mom Mini does this too, as you get into it and you start making progress, like, not only are they green, but they're actually moving up nicely. And then, week to week, you should see that progress. And then he said after 3, 4, 5 weeks, you will see lots of leaders breaking out. That's how you know it's a true bull cycle, right? We haven't had that this whole year.
Yeah.
Every time, even like the last rally since October, we see it. Enphase couldn't break out. Even Celgene took a while. I mean, all these big leaders like that we think are leaders, like Shockwave broke down even. So there wasn't many. Um, anyhow, but obviously there's always some leaders that are trending still. But he's just saying in general that you need to see a lot, not just like one or two, right? So that's how you know when the bull has turned. And he talks about he talks about right here, right? Tesla, and we'll jump into it in a second. 2.4% of leaders will become leader again, only 2.4%. Right? So you have a 98% chance of being wrong. So if you think the FAANG stocks or Tesla are going to be the next leader again, just like the last cycle, you have 98% of being wrong. Okay, so not saying they can be leader again, is very, very hard. And he used examples like back in the 2000 crash, right? You have AOL, you have Yahoo, you have all these big names. They all disappear, most of them, right? They either get bought out eventually when they become small, and then just turn into something else. So he said, be careful of that. This is statistics that he has studied. So it's most likely going to be new names that's going to dominate the next bull cycle. So why focus on the old names, right? Is what he's trying to say. One of the things that most people also make mistake this year is like, and this is again IBD style investing. IBD investors tend to buy on new high, meaning like buying on breakouts. He said, yes, it didn't work this year, but it saved you lots of money, he said, right? Because most stocks couldn't break out to new highs this year, right? And when I say new high, I mean like literally new high, not just like a yearly high. And so, or at least in the 1 year time frame, like it hasn't broken to new high. So those are the ones that if you follow this rule alone, you probably save yourself a lot of money. Instead of trying to trade on let's say pullback or something, right? Because it's a choppy environment, so it pulls back a lot until it breaks to a new high. Even though it might fail, at least you're not trying too many times, because how often does it break out to new high, right? So that's something that's very interesting I found. That could probably save me some money because I've been buying on pullbacks this year, and a lot of them didn't work. Even buying on pullbacks, they just chop up so quickly, right? But if you buy a new high only, and it then because how many times I say if it fail, it'll fail and then it'll come back, and then it's unlikely it'll make new high, at least for another little bit time. So you won't get chopped up as much instead of trying to trade it. One of the things they talk about is how in January, or I think it was in February, we can jump to the chart in this one. Let me pull it up. For example, he used Tesla as an example. But he said, right, so there's a couple of areas. The 200 days is very important. You see, You see this 200-day, right? When Tesla was on this run, 200-day was very far below the price.
Are you sharing your screen or?
Okay. Let me share. Sorry. I think I missed that.
No worries.
So yeah, so can you see now?
Yeah.
So this black line is the 200-day. Let me take out all the lines here, markups. But here's the so on this run, no problem, right? So he talked about 200-day, right? Like so there's some long investors, especially institution, they follow either the 50 or 200, right? But in general, most institutions would definitely like sell. Look at how tight right here is, right? Even near the 200, right? And then it broke to the last time, broke out the last time, make that 38% gain right here, and then it fell apart. But when it started to fall apart, so he talks about a few things, right? One is the 200-day, which is right here, like right here, it came back. So it came back. So again, you don't have to sell exactly. Like you can make a how do you say a manual action on that, right? Same thing with 50-day. It's not like you set a hard rule, oh, hit that trigger at 200, you sell. You watch how it reacts around that line, right? So here it bounced back, but even if you didn't sell it there, here's where it broke really hard. 2 straight weeks, right? Okay. And 50 days converging with 200-day right here too. So this top right here, you have lots of opportunity to sell. What he's saying, right? But again, most people don't sell at 200 because you're giving up a lot unless you up a lot, right? But if you up a lot, yeah, you can give it more time and wait for 200 days. But let's say you didn't make a lot of money, you up a little bit, then you can look at 50-day and watch like how far below 50-day it goes, right? So generally he give it roughly around. It's both based on time and percentage. If it's like price, if it go down more than 5%, usually, you can sell. Like this is a signal right here. Okay. So below the 50-day, right? And again, it depends how long too. If it's like this one, you can see it stays under it. Not only it drop 5%, it stay under it, stay under it, stay under it. Look at how many weeks it stay under, right? So time also means that something is wrong. Of course, it bounced back here, fool everybody, and then here again, here it started rolling over again, right below 50-day. So here's, like I said, here this is probably the last line of defense, 50 and 200-day broken, right, at the same time. So now it's free fall, right? So on hindsight, of course, everything always look easy, but it's just general rule of thumb, right now we're on this slope, which is very dangerous. So again, just in general, he's using this example, but even if you look at the index and stuff, probably similar. S&P. So on the weekly chart, so you can see it broke down 200-day, but it bounced back here. Here, 1 week down, second week tried to bounce back. Third week, it couldn't bounce back. Fourth week couldn't bounce back, and then fifth week it bounced back. So here again, it fools people, but really, now it's below 50 days, now below 200-day. So those two lines are like very important, right? So I think this is like the key right here. Okay, so right now, okay, I want to finish what he said first before we jump onto the index chart. So he said most stocks should be sold about, roughly 23% off high. Like again, this number is like can vary based on stock, but he said on average, that's where most stocks, once they fall below this, there's a high chance the run is over, and especially if it's like below 50-day, right? That's the key, right? So if it's below 50-day, both, right? Both the amount of high as well as the time, that will tell you that there's a high chance the stock is rolling over. So we talk about 200-day, right? Okay, so he did mention some good stocks. We can jump into it later. SMCI, MBLY. Like MBLY, I don't have it on my list just because it doesn't have a good forecast. But who knows, right? They could beat those forecasts in the future. Like the reason he talks about weeks of accumulation, and we'll look at the chart. Like we can jump to it right now since we talked about like SMCI. I just want to point this out. So right here, you have 6 weeks of accumulation, right? When he said when you see 5 to 6 weeks of accumulation in a bear market and it's breaking out like this, it's sign institutions are buying, right? So right now it's pulling back, but it's not giving back much, right? Look like even the last 2 weeks was pretty severe, but the stock is not giving back. Like it's not like falling apart like crazy. Is what I'm trying to say, right? It's pulling back. There's no doubt it's pulling back. Look, it's pulling back to the 50-day. It hasn't come close. Even Friday, it didn't even want to drop no more. You see that? Right? Friday was a down day, right? Just remember, it didn't want to drop any further. Like I was thinking it will hit 50-day. It didn't even want to touch it. So, and this is the previous buy point right here. So, means that there's a lot of support, right? Because remember, all these institutions buy around this price from here to here. Their average is probably around this price. So you can see they're holding really strong. So this is a potential true market leader. So he talks about how 2022, right, a bad year for most, but what happened for this stock? There's no bear market for this stock. Like institutions, you can see all this blue bar. Institutions are buying, right? All this high volume blue bar is institutions are buying. So this stock will rock and roll as soon as the bear market is over. And it's already even right now it's already starting to perform better than so many stocks, right? So these are signs of a true market leader. It's still a small cap. That's the only thing he said that is kind of negative. It does have a 2024 forecast lower, but again, he said that so this was raised about this number. He said that yeah, that's really far out. So he's like, you can't still run is what he's trying to say. If there's momentum, right? Like I said, as long as you keep beating. So he talked about right here. I don't know if you can see at the bottom of the box, earnings surprise. What on the right it says 34%. It means that whatever the market street estimate was, it beat it by 34%.
Oh wow.
Right? So it went much higher than the estimate. Not only is it higher in terms of like the actual number, but it also beat street estimate by much 34% higher. So this number is crazy right now, right? So this is why there's so much accumulation in the stock. So again, we have to take it into perspective, right? This year is a down market. To find a stock like this is very hard.
Yeah.
So something to focus on, like in terms of like next year when there's a bull run, right? So that's one of the stocks he highlight. He talked about MBLY. The only reason he talked about MBLY is he said that especially in the last few months, this year in general, but especially in the last, he said that this was one of the very few stocks that raised money through IPO. Most of them are either a spin-off, which is there's already money for the IPO, whereas this one is actually raised money from scratch to go IPO. So he said that very hard conditions to do that. The fact that they can do it means the analysts have done all their due diligence, making sure all the numbers are good. Okay, so meaning like there's a huge potential. That's why they're willing to go IPO and raise money, right? Because right now liquidity is drying up in the marketplace, and not many investors want to put money towards high growth stock, and this is potentially one, right? So Intel, this belongs to Intel before, but like I said, they didn't use Intel money to spin off. They actually raised money to do this IPO. So that's why he said this is something to watch. Like I said, the only thing is not on my list is because it's because it's if I can share it here, let me see. I think the next earnings forecast is negative. So for me, I really it probably will beat it, but it's just that for me I have a very hard rule for me myself. not to use anything that's negative. Let me see if we can find it. I think I'm pretty sure. Yeah, right. Okay, you know what? It has changed. Look at this. It's funny how this happened.
Yeah.
So it has raised their guidance. So that's probably why this probably must have changed in the less than like this last week someday. Because I remember looking at this a week ago and it was still negative. So that explains why it broke out this week. Probably there's some guidance that has been revised. So now since it's positive, I'll probably add it to my list. And it broke like so this is a very hard pattern to see, but let me see if we go to daily chart. So on IPO stocks, IBD doesn't use a strict rule for the base building, meaning like it doesn't have to be like 5 or 6 weeks long. It could be shorter. And so you can see there's first base drawn here, very short, because it's an IPO stock. And then you probably could draw another base here. So then it broke out from this, pull back, and then now it's broken out. Now it's just riding the 10-day. You can see that green line right here. So, and it's already up 20%. It already broke that 20% mark. But for IPO, that's nothing. So the key is like, is this gonna keep breaking out, right? Like keep going higher is the question. But like I say, I didn't know that you know. So probably some people know this. I don't know. But it seems like it broke out, so that's good news. So this is good. This is good. Like I didn't even know this. Like because yeah, I don't look at every single stock every day. So he mentioned this, but yeah, he even in the meeting this like I said, this must have changed like in the last 2 days because the meeting he had was like on Wednesday. It was still negative. So it's funny how this happened. So yeah, so that's good news for mobile. If they are making money, right? That's the key. They're actually making money in the positive and accelerating too, right? That's happening. Hmm. Yeah. So those are market potential. We talk about this ALGM. This one, I think 1, 2, 3, 4, 5, 6, 7, 8. Yeah, 8 weeks of accumulation right here, right? This is huge. Um, you know, not like recent IPO, but in the last 2 years, right? So it's still a fairly young company, 5 billion cap, right? Potential leader. This part right here is like where like you don't see many stocks get accumulated like this, 8 weeks in a row. So that's something he said, gotta pay attention. There's lots of look at this blue wall right on the daily chart. Look at that, right? So obviously Friday we have high volume throughout the market because of option expiration. So that's most people have to liquidate their position, either puts or bear or calls like whatever. And so the volume is super high, but that happens on every stock, even on the like you can see on the market index too, right here. See, super high volume. So it doesn't really mean much because it just means like people have those positions for a long time ago and they just let it go. Um, and it's either washout, right? Washout trade.
Yeah. Hmm.
So yeah, look at S&P 500 close exactly at 50-day. The one good thing, sorry, I'm jumping back to index. The one good thing I noticed on Dow, so Nasdaq gave up the 50-day. S&P, as we just saw, closed back at 50-day, even though it went below it during the morning or earlier in the day.
Hmm.
But Dow now reaches this, so this is a good crossover. 50 days crossing 200-day. So this is technically on the uptrend now, right?
Yeah. Yeah.
Very bullish trend. So the key question is, can it bounce off here? That's the question, right? If it bounce off here, I'll be more bullish than bearish for sure, right? Because this line not only has it flattened, right? It has flattened the 200-day, and now the 50-day is rising. So to me, that's a definition of an uptrend, right? So if it can bounce here, I'll be more bullish for sure. Like
Hmm. Hmm.
even though it's not new high, um, just because this trend is very strong, right? You have to remember, and then we'll talk about some industrial stuff like Caterpillar. It's really strong right now. It's big cap giant in the wall. And why is Cat doing well? Because um, the wall is maybe doing better in general. So okay, so let's come back to this. Hello, he didn't mention many stocks in that meeting, but he talked about biotechs, and this is one of the few stocks that are acting well. You can see all this high volume here. Recently, it's kind of dry out a little bit, but you know, again, same thing, right? You have, you know, he called it the wall of blue, right? So 2 big week of high volume here. So those are signs of accumulation, and this stock already broken to new high out of this long base, and so you know we can see the prior uptrend right here. So now it's, you know, it's broken out, right? So it could go up that way, right? So this is a one to pay, and also the earnings are pretty good for one that is actually making money, right? It's not, most biotechs are losing money. Halo is one of the few that's making money. So those are, you know, again, we need to focus on stocks that are making money and are growing, right? So we can't focus on stocks that are losing money. So even though they could have huge potential, because you just don't know, right? Especially for biotechs, you say, right? Like there's so many it's the biggest sector, right? And there's so many biotech stock. All it takes is like one trial or something that didn't go right, and boom, the stock tank. So so if you're gonna buy biotech stocks, you better buy one that's making money already, who has already proven they have a product that is approved by FDA, that they're selling today in the marketplace, and they're making money from it, right? Uh, so Halo is one of the few ones that actually do that. So the last one he talked about is Cat. Um, and there's lots of people talking about this stock. A huge giant, 120 billion, breaking out, you know, slightly, not much, but it's holding tight. That's the key, because you have to understand this. Look at this run right here, and look at this volume down here. Blue again, wall of blue. Even this week is a wall of blue. Look at that. Even though it's a bad week, right? So everyone is talking about this stock, is ready to break out. Um, you know, based on this breakout line here, and it's a multi-year level here. So look at this run before that, right? So it could take off, like is what I'm trying to say. And a lot of people talking about this right now. And you know, machinery, right? Like why is machinery so important right now? Because they believe the world will do good this year. So um, okay, so that's that. So we're gonna kind of review a little bit of what happened this last week or so before we jump into more analysis. Um, I think if we go back to index chart for the S&P. So on the weekly chart, we clearly found resistance at 200-day, and then it fell all the way back to 50-day now. So obviously the next big question is it going to fall below 50-day? That's the next big question, right? It did fall below it briefly on Friday, but it's kind of sitting near that level. If you look at NASDAQ, it already broke it. But NASDAQ is the weakest of all, right? Actually, small cap Russell is the weakest. But in general, for the big cap, this is the weakest. So this one's already broken. That's not a good sign. But we'll look at some stocks, because I think there is some positive, is what I'm trying to say. We'll look at some stocks in general, because yeah, okay, we'll come back to that in a second. Dow. So Dow, we just talked about, is now hitting the 50-day. You know, we also has this high level here, the previous, you know, it broke above that, but now it has found resistance near that level. So that's the upper range resistance. And then we go to Russell, right? So again, you can see this, it just couldn't pass this 200-day much, right? And now it fell below 50-day. So technically, really bad. There's no doubt about it. Like even as we talk about it during the days, we see it slowly breaking down, right? So we go back to S&P daily chart, right? So what happened? So I want to go back 2 weeks because I feel like even though this week is important, I feel like it's important from the context of 2 weeks. So we have this,
Mhm.
actually we'll go back even further. We have this big jump from CPI number, the first one, the one previous to this week. And then we compare that to this week, right? Same thing happened. It jumped, right? But it couldn't close strong. In fact, it just diminished, right? The gains. So we have two good CPI report, which means inflation is coming down. It has peaked. There's no doubt about that now. The problem is the Fed came out on the day after, right? So remember, the Fed also came out here. So let me just
Mhm.
refresh this. I just want to see what happened, right? So here the Fed came out and said, "Hey, we're gonna lower from 75 to 50 basis points," which is exactly what happened. They gave 50 basis points hike,
Right.
but then they said, like you said, the dot plot is higher than they thought. Like it's gonna be now 5 or 5.25 next year. So not only that, they say it will be probably higher longer, meaning it'll keep it at this rate for higher longer, meaning they won't reduce rate anytime soon. So the
Mhm.
market did not like that, right? Uh, it's not so much whether they'll hit the peak of 5 or 5.25. It's more of the thing that they said, which is they want to see wage goes down on labor force as well as labor force kind of weaken, right? And the wage inflation is a huge problem for them, right? So everything has gone down, like the housing has gone down, rent has gone down, oil has gone down, food not so much still, but that's not as big of a component compared to those other ones. But wage is a big component, like I think 55% of CPI.
Mhm.
So that's why they're still really hawkish about like having to keep the interest rate higher for longer. So that's why the market now is repricing the market rate. It's repricing now, and we broke out this range, right? So this is the range. So from here, the CPI came out. We went above this range, and we stuck around this range for a long time now. And then now, because we thought that hey, inflation is gonna go down, Fed's gonna be dovish. Not so the case, right? So now it fell back below that level, basically back to the day where the first CPI came out, right?
Mhm.
So that theory now is out of the window because um, is even though CPI and that's going to happen. The next few months is just going to keep rolling down, right? The problem is that the Fed wants to keep it longer, right? That's the problem. So some people think, and a lot of analysts think, I don't know how many percent, believe that this will create a bigger recession, right? There's no doubt there's a recession coming, but they just
Mhm.
some of them like believe that it will be a bigger recession, right? So so that means that company earnings will go down further than people anticipate, and that's why market wants to price in that right now. The question then becomes: is it going to price that in right away, or is it going to price that in more closer in January, like sometime in January? So that's a question. I don't know which is the right answer. Um, do you understand what I'm saying? Like,
Yeah,
what's
yeah,
your
yeah.
thought?
Yeah.
I'll give you my prediction in a second, but I just want to see what your thoughts are right now.
No, exactly. But see, I was not thinking like crazy recession, but yeah, mm, yeah, I kind of heard that view, and yeah, basically, I was thinking that okay, they'll tight until the inflation, until they see inflation is coming down, then they'll ease up or keep it there. But
Mm-hmm.
that's not happening. Yeah.
Right. So, um, for me, I feel this range was so important, right? This range right now that I draw out, and the fact that we close Friday at that level doesn't mean like it doesn't give us any clue what will happen next. But what I want to say is we have this run, right? Like this uptrend here goes up to this where it digests. Right now, it feels like it wants to break it. Like Nasdaq broke it. Um, IWM broke it. So again, the chances of it going down is pretty high right now, but it's not
Mm-hmm.
completely over, right? It's not completely over, like because it hasn't made a new low. The low is right here, so it could go down further, and then once it break it, and it'll be bad. But we still haven't broke that. We still, just barely below it. But like I said, Russell and Nasdaq is leading to the downside right now. So if we go back to Russell, so those are the two index that are, okay. Let's look at Russell. Even Russell, I kind of find it interesting that it's not, it's the weakest right now, but it's not even like completely near the low. Nasdaq is even closer than Russell is.
Mm-hmm.
Whereas, like I said, S&P and Dow are trying to hold up, right? So here's S&P and here's Dow. So why I make this distinction? Because this was the same thing that happened in this uptrend. Like Dow was the one who's leading this uptrend, right? And now it's only fallen this much compared, like, it probably should be more closer here, halfway, but it's not, right? It's way up here, right? And then S&P is probably like in the middle range, right? Same thing. So it goes up here, it's kind of halfway right now, right? So those are still positive, like from a technical perspective, those are positive. So S&P and Dow is still like look like they're in an uptrend, whereas Nasdaq and IWM has kind of fallen a little bit below, like more a little bit more negative now, right? Um, so the other thing I want to say is I see a pattern here, right? It's called a microphone pattern, and generally a microphone pattern is like, instead of converging to a narrow a point and break out one way or the other, this is the opposite, right? It's like it goes up. So this is what I've been talking about. It goes up, goes down. It's very choppy. It goes up, goes down, choppy, right? Look at this. It just get wider and wider, you know. So if this bounce, this look at this. Where's the next point? The next point will be much further out,
Mm-hmm.
and it will be like, it will be way above the 200-day line, and that's a positive if this happens. So this is something that I think in my head, like, could everyone be wrong about what's going to happen in the next 2 weeks? I don't know. You know. So the other thing I want to say is like pay attention to company earnings. Like even this week, you know, it's funny because right now everyone focuses on the headlines, right? Like Thursday retail sale number come out, things were really weak, and boom, market fell, right? Um, forget about Wednesday, what Fed did, but even Thursday, it was like, headline number, retail sales really weak. And so everyone focusing on the bad economic data. And then Friday, I can't remember if there was any news. But anyhow, so it weakens a little bit more.
Mm-hmm.
So again, we have this microphone pattern. This is our last hope. Like if it does, as long as it doesn't fall below this microphone pattern, if it does fall, I think it will fall hard. That's the only challenge.
Mm-hmm. Mm-hmm.
Mm. So that's why I think some people think Monday and Tuesday could be really bad just because of this pattern. Um, because this is again 50-day will be the last defensive line for S&P. But on Friday, it went through it like almost like bought it. Like there was no pause. It just went through it. So
Mm-hmm.
that's why I'm still more bearish in that sense. Now, that's what index are doing. You know, um, we'll look at stocks in a second, what they're doing. Yes, most was broken down, but there's lots standing up still, which is kind of surprising. I keep finding that word is surprising. Like, but again, it's very choppy market. If you in stocks, you can easily get kicked out. Is what I'm trying to say, right? So, especially if there's more weakness.
Yeah.
Um,
So I also heard about like earnings will be revised after
mhm,
New Year, after
yeah.
basically Q4 earnings, and then revised down. But have so yeah, that could be one of the thing which is coming. Uh, Also one more thing, I saw home builders, those
Mhm,
stocks.
mhm.
It's quite interesting. They are going up. They are pretty
Yeah.
much
So
staying there.
everyone is talking about this right now. Um, so yeah, you see, this is a home builder, right? like it make the new high just like the S&P did on Wednesday, but it fallen back like just following the market, but it's still above all the trend lines, most of them, you know. So this is
Mhm.
like really good, and so it's like in this base right now, right? Like it broke out, but now it's falling back into this base again. So again, this is very similar pattern, right? Range bound. It wants to break out, but it just keep finding resistance, and it's not at the low of the range, right? So that's why this one is probably one of the strongest chart right now. Um, yeah, and the reason why is because so I when I listened to analysts talk about this on Friday, they say that this sector again I don't have the data for the forward-looking. Let me see, PE. Yeah, it doesn't show here, but I don't know what the like if you look at specific stock, you can probably see it. But they're saying the PE in this sector is lowest in like history,
Mhm. Mhm.
right? So meaning and you have to remember like this is probably like you can easily compare back to '08 or even 2020 markets, right, when it's like recession time, and they're saying the forward looking PE is like the lowest in history. So that's why people are buying this sector right now because it's so low that um, it's unlikely to go lower, right? From a value evaluation perspective. So right now, it's all about evaluation. That's what some analysts are saying. It's all about evaluation. Like everyone know what's happened. We all know inflation is coming down. We know that Fed Powell and the Fed themselves probably going to be wrong, meaning like they will hurt the economy more than they should right now because of staying with the high restrictive policy. At some point they will turn, but most people think that will be too late, right? So let's say they do turn like by March. I don't know when. Okay, let's just assume by March, right? That's a realistic goal. 3 more months of high restrictive rates. Maybe they'll raise even 1 or 2 more times, right? Even maybe not much, but still, even like say 50 or 25 in the next two times. I think that's what the projection is. I think I have it in my Excel. Let me show you. I go to interest rate 25 right now.
Mhm.
So I don't know if it changed yesterday. I think I had this updated earlier in the day. But 25. So February. So and even then it only went up to 475. But right now they're saying 5 and 5.25, right? So the market is pricing in less now after that inflation number that came out. So, which is interesting. Again, the bond yield, the long-term bond yield is indicating that, um, you know, that there's nothing changed. Meaning like, even after the CPI data came out and what Fed does, nothing has changed. Meaning that the market still think a recession is coming. So
Mhm.
and it has never been wrong. That indicator is very solid, correct. If we can pull up the chart right now, let's see. Let's see. Go to right here, 10 year. So let me collapse the time frame a little bit. So we cross over July 5th. So that's officially when the 10 year is below 2 year, right? So
Mhm.
they say roughly, or history is like roughly a year. So July this year is when it crossover. So July next year will be in recession. And so a lot of analysts do believe, like not all, a lot actually believe it will arrive earlier, like in the first quarter. But there's some belief it will more closer to between second and third quarter. Like so, kind of like this indicator, right? If you take 1 year out, it'll be around July.
Mhm. Mhm.
That's when recession will hit. So that's important to know because um, but I think so. Eric Johnston, and now I can jump to Eric Johnston. He, he was the guy you asked me about, and he was right about
Yes.
the downturn recently. He came out. He was one of the few who came out, when everybody was a little bit more bullish, and he was one of the few that came out that market is going to turn. Um, and so let's jump back for a second. So right here, this was the week ending. and then he said that market will probably go bearish from there on. And he's somewhat right. It went bearish, and then it bounced back on the CPI report, which is really shocking because it shocked, like it fools everybody, and now it make a bigger down. Like, look at this range, right? It down almost like 8% from top to bottom. That's a huge drop. Um, so if you're in the market, you got hurt bad. If even if you have stopped, you got hurt bad. And the question is this is this going to continue like a crash? Like some people on Twitter say, "Oh, a crash is happening right now." Like if let's say it does go lower, this is another 2 big days. It could be like this. Shake out even more people, and then before it rebound, right? Um, I don't know. I don't know. It could happen, especially if liquidity dries up. It's easier for people to sell and not much buying, right? So there's lots of people again continue to talk about tax loss selling, that stuff like that. Um, Also, there's statistics that show that that's why Jim Roppel also mentioned that it'll probably go down more, just because he says statistically shown that um, the last week or so in December is usually down if the market heading into December is down. So meaning like we entering December like a negative year, then usually December like the last week is no center rally is what you're saying.
Mm-hmm.
So that's the stats that they have. But and again, um, which could happen again because people will give up right now. Like again, there's no more news that will come out. I think. Oh, there's gonna be if we look at news, let's go back to news. That's not right. They did talk about that. So we go back to news for a second here. Economic calendar. There's actually a lot of news that will come out that might impact the market. So for example, so 17, 18, 19, 20, home builder. There you go, right? You want to see how home builder is doing? This will move the index.
Mm-hmm.
So the one of the things that I heard about why the home builders are going up is because their supply has dropped significantly. I don't know why, but
Mm-hmm.
that's what they're saying. Like because they don't want to build homes when excuse me when they feel like the mortgage rate was at least at one point really high. It has dropped back from 7 to 6% or something roughly like that. Um, but they're not building as many homes, right? So supply has dwindled, and then demand is still there, and so therefore, going forward, it should be more good news for them rather than bad news because of supply issue. Um, and so that would be interesting to see if that happens. Again, you see building permits, housing starts, all these are related to home builder, like Monday and Tuesday. That's and then we have even existing home sales. So a lot of home building stuff this week. Um, then we have consumer confidence. So I cannot imagine this will be good. Actually, it went up higher. I don't know. The forecast is higher. Um, yeah. Then let me see. I think, and then this one, index of leading economic indicators. Huh. It's also going to go up as well. Interesting. This one is also interesting. And then we have PCE.
Mm-hmm.
We have PCE, so that will be important. Well, that's inflation data. So yeah. Again, I don't see much surprise on the home building side. Like that, at least that's my opinion. Um, I think more of the same will be the same there. I don't know. Um, yeah. So going back to home builder. So I look at ITB. I don't know. What's the difference? This one, the other one, XHB is home builders. This one's called home construction. This chart looks slightly better than the other one. You can see, it's like on a nice uptrend. Like you can see this trend line both, right, bottom and top. Um, and then Thursday we have a big shakeout, rebound off, so all these rebounds off the 10-day or 21-day is a potential, but the trend is higher, right? You can see it keep making higher highs, and um, Yeah, like and Friday is a down day, right? But it wasn't the it was probably I think it dropped 2% or 1.4% on Friday. So it's not a big drop. It's an inside day, so it's still within this boundary. So yeah, I own this right now. So we'll see. I don't know. I'm just following this just because it has such a nice trend. Like I have to get into it. And it's also a signal for me. I feel like if this is the only thing standing strong, as a sector, I want to see if this will follow through. You know,
Mhm.
yeah, because it's at new high, like close to new high, at least recent high, and yeah, like I like this formation, right? Like I like that. Um, this is a V shape. This is a W shape. So it's already test twice. You got a higher high here, higher low meaning. So that's a good, right? So broke out 200 day, right? 50 days. Okay, see, 50 days almost ready to cross 200 day.
Mhm.
All technically, this is really, really strong. Yeah. Um, yeah. And like you can buy individual stocks too, but I choose not to just because there's too many of them.
Mhm.
There's
Mhm.
land. Like they all have similar pattern, I think. But of course, you might get a little bit more performance out of individual stock. DHI, DR Horton. Yeah, I think DR Horton was the one that report some number. Yeah, see, it was down in the morning, and then it reversed up by the end of the day. Like that was the day. Like it was crazy.
Mhm.
Like look at that shakeout volume. Holy cow! So yeah, but that was the same pattern for the whole sector that day. So that's the what I like about it. Like as soon as it rebounds, I was like, yeah, might be opportunity here. Um, so we'll see. The pattern is really good, right? Um, yeah, there's so many stocks in this sector. Like I just don't want to buy individual stocks since there's so many of them. But they all look they all like at least in the short term they all broke out from a cup with handle pattern. So that's really bullish. MTH, I don't know why this is not working. Go ahead and click on that. MTH, same thing. See, GRPK. This one is probably smaller. 1.1 cap. Okay, so this one is a little bit weird. I don't know why. Yeah, this one's a little bit weird. TMHC. Yeah, yeah, same here. Right. So yeah, so they just started on this uptrend,
Mhm.
and they're all broken out. Most of them broken out from this smaller cup within the bigger base. Um, so yeah, coming back to ITB, you know, it's still very steep base, but at least short-term technicals are good. And I like the Thursday shakeout. I really like that was the day that I was like, this is interesting, right? Um, and so one of the things I told myself, like, even though this is really I shouldn't be buying stuff just because it's so bearish right now. But I said, if there's something showing lots of strength and it bounced off like a moving average, I will consider it, right? Because your risk is, like you can set a stop here, right? Um, and at least it'll be less of a risk, again, I don't know. The problem is like how much upside is there, right? That's the only problem in this environment. That's the biggest question. Again, risk reward kind of you have to kind of look at that from that perspective. So coming back to Eric Johnston, the other stock that came, like I wrote down here, like something happened on Monday morning. Box was upgraded, right? So
Mhm.
I found that interesting because um, here's a pattern, right? Like it broke out. Most software stocks are near the bottom of their base, but
Mhm.
this one Like if we go look at Monday, I didn't buy Monday. I bought bonds. And look at this. It's like, I mean, you can, I guess it kind of broke out too. But it's just it's just have lots of overhead still overhead right here. You know, a lot of overhead supply that might be harder for this one. And also it doesn't have the future earnings that I'm looking for. But if I go look at box, you know, this is almost a new high, like, right? And then the earnings, future earnings, you know, it's 42% for next quarter, so it's really positive. And you know, and you can see, look at this, it's like really strong this year, right? And then look at this volume, wall blue, and look at the red volume, so low. Like this week is like not something happened here, like no one sell anything. Um, yeah, and ours at new high, right? So I had to buy into it. Like it's just too good to pass. Like even though it's not at the top, but the breakout here was really nice. You know, yeah. So you can draw a trend line here. Oops, sorry, screw up something here. Let me refresh. Yeah, this is really nice right now. Um, and yeah, it's sliding a little bit because you know again it's a little bit above the 10-day. So no, this day was the day I bought, bounce off the 10-day, and you know you can slowly move your stop later. But now it's starting to you know I don't know if it'll bounce or keep calling to the 10-day, but there might be another chance here. But I just say this general really strong fundamental technical really strong, especially this week. Like this week is a bad week, and any stock that showing strength, like especially going up or you know selling very little, things like that. Like those are the stocks you want to pay attention. Like you know, I'm not saying they'll run up a lot, but I'm just saying at least those ones will have the chance to go up like, as soon as this, you know, if this rally can like bounce again. So I don't know, but I just want to make sure I don't miss this ones because it really indicates something good here. Um, but sorry, yeah, kind of coming back to Eric Johnston, he said, remember, he's bearish now. Um, he said in the past, people were looking for inflation falling. Everyone now knows it is falling. In the past, people were looking at China reopening. It's already reopening. So all those are old news now, right? But what is the new news? Well, Fed is going to keep 5% rate, plus or minus 25, he said. There's no doubt about that now. So meaning there will be at least two more hikes. So that's like February and March. Earnings are coming down, right? So again, not every stock has pricing. Like we just talked about home builders, they already price in like the worst case scenario. That's why they're moving up. But a lot of areas hasn't. A lot of stocks hasn't. So that's why the still stocks could still come down a lot for some of them. Um, Seasonality down in January, February in bear markets, he said. 100% of the time. So that's really negative. So, economy slow down. Yeah, like economy is slowing down. So there's just so much headwinds. And then he talked about like no one even talk about this like quantitative easy, tightening, right? So liquidity is getting taken out of the market right now, right? So he talked about lose-lose situation. Right now the earnings are 18 times, so it's really high, right? At least he thinks it's really high, in the bear market, um, and so it has to come down. Um, he's saying why is it a lose-lose situation? Even if inflation comes down, but Fed maintain this rate, it's gonna it's gonna drive companies like you know earnings lower. And if companies' earnings are lower, they're gonna drive, you know, more layoffs, and you know you're gonna have more consumers getting hurt. So it's just a lose-lose situation. I think that's what he said. Um, he talked about right now, like a few weeks ago, he said like a month ago, positioning in the market was really not as much long. But now he say a lot of people have bought back in to the market. So he's saying right now is net long, meaning like there's more people long in the longer term. So in terms of positioning, so I don't know how they measure that, but they're just saying basically more people bought back in, and so it's kind of like you know like there's no more like kind of we talk about this stochastic like momentum thing also like let me bring show you. So for example, we look at Nasdaq and ADSQ maybe and A oh I spelled it wrong NASDQ. So here, so this is the oversold overbought oversold right now. uh like we're still kind of high compared to like the lows.
Mm-hmm. Mm-hmm.
So it could sell off further, is what I'm trying to say, right? So the positioning is still pretty high. Um, so that's what he's saying there. Um, he's saying, it will hit probably 30, like this right now, it'll probably hit 35 to 6, and then eventually it'll hit 3,000. That's how bearish it is. Before he
Wow.
said,
Mm-hmm.
that's how it's like, at least like from a longer term, he thinks that it'll. So this is pretty much like Mike Wilson from JP Morgan, similar. So he's really bearish now.
Mm-hmm.
So Gundlock, 75% probability recession. Um, I can't remember what this guy said about semiconductor and industrials. Yeah, yeah, this guy said he likes this too, surprisingly. These two sectors.
Mm-hmm.
Um, the other thing that was mentioned, I don't know who said this. So, oh yeah, this is a guy from Charles Schwab. I don't remember his name, but he's saying, and same thing. Yeah, they say the same thing. It's not like this is what I don't understand, right? It's a rolling recession, right? Like some analysts call it a rolling recession, and so meaning like different sectors in the economy already been hit. For example, home builder is a good example, right? They already like priced for the worst case scenario. Um, so it's not like so this guy is definitely I don't remember his name. He's definitely a little bit more bullish. And he said that things already been priced in most areas, right? Of course, there's still some that are gonna work its way down still. And the other thing he said that the labor market, may not soften as much as people would think. Which again, this is what the Fed is saying, right? Like, labor market is strong, labor market is strong. We have to keep the interest rate high. But what if inflation falls down, continue to fall down hard, right? What if inflation falls down hard the next 2-3 months? Like, because the next Fed meeting is in February 1st, and then the next one is even later, March 22nd. So that's like, let's say they're gonna do this 25, 25, right? It's 3 months. So like I said, we will have some sort of probably still more downturn just because of this. Just the market have to see through this, right? It's not like something will happen, you know. So but what he's saying is that maybe the recession is not even going to be bad. He said, right? At least from a labor perspective, because he thinks that the labor market is just so strong, right?
Mm-hmm.
But inflation could come down, and how's that going to happen? I guess that's where the Fed is stuck. Like it is stuck. And so Professor Sika also went on Friday and said about so he was asked about the question, the Fed, really think wage inflation is a problem right now. How like why do you think that's not a problem? And then he said, wage inflation. He said during the pandemic,
Mm-hmm.
um, to or at least the year after, inflation went up 5%, but the wages hasn't gone up 5%. So he's saying it's not a problem because it's catching up, right?
Mm-hmm.
To the marketplace. So he's saying this is not like gonna hurt the economy as much as people think it would. So that's what he's trying to say, I think, in short. Um, at least that's my understanding. So meaning, and the same thing with this Charles Schwab analyst, he said the same thing. So it's interesting from that perspective because it is possible, even though right now market is trying to price in a harder recession, it might not happen. There's still a chance it might not happen, um, because the job market is just so strong, right? So anyhow, that's just some of the new thinking. Um, yeah. So any other questions before we look at some stocks and stuff?
No, sounds good. Yeah.
Yeah, so let's look at a few quick sectors. SMH, yeah, same idea, just like Nasdaq hitting new low, breaking out of this range. So that's the one thing I do like about, even though Nasdaq broke to new low again. Friday was a weird day to me. It's like, I mean it's more clear on Nasdaq actually, but SMH didn't, like here you see it closed at the bottom, but SMH it kind of closed halfway, right? Right. So like you can see here, okay, 42%. I mean, it's slightly towards negative. It's not quite 50%. We'll look at some stocks and see, right? What else are we looking at? Let's look at solar for a second. Yeah, same thing. So solar also fell back. So hit a new low on the range, on this range here. Um, but again, it closed where near the top, right? Like, so it's like 57% range. Um, what was the other ones we look at? SMH. I think, do we look, okay, health sector? Um, so health sector slightly better. It hasn't hit a new low yet. Interesting. Um, IGV is the software. Okay, so like really holding up right here at this level. So you can see how many areas are holding near this level. Some of them falling a little bit, you know. Did I miss anything? Anyhow, we'll come back. I'm sure there's yeah, XLE. Let's look at XLE. So here, interesting week, right? Energy didn't make a new low this week. That's interesting. Okay. You would think it would, but it didn't. So that's interesting. Um, yeah. Okay. So let's jump to I'm sure we'll come back to some. So ITB, talk about that. Chinese stuff. Futu, BTD. Okay, so they come back to their 10-day, right? PDD, same thing, come back to 10-day. So it's holding tight there. We'll see. Friday it didn't make a like Friday see it didn't make a new low. That's interesting. Go back to Futu. This one did, but it's still holding up 10-day. Look at that range, right? Like after a big range and then a tiny range. That's so interesting. Usually that's a good sign, but we'll see because it just means the selling is exhausted, right? Okay, so this is oh yeah, this is really strong. TRMD. Continue. Look at this. Almost breaking out again. Like, look at how tight it's trading right here. Like, it just wouldn't even touch the 10 days. See that? It's just like, again, you have to remember what happened in the last few days. It's not good, right? But this stock is just so strong. It's ready to break out again. Um, so amazing stock, this one. Oil and gas transport. It just shows that the European issues are not going to go away anytime soon. TGLS, this one is volatile, but it's a strong stock, right? Like it's just constantly making new highs and making higher lows, right? It's a more volatile stock, but it definitely shows some leaderships. So it's a very smaller cap stock. That's why it's more volatile. So, but again, it just has. Look at this wall blue here. Lost so many, right? It's a small cap. Look at this earnings. It's just spectacular earnings, right? Ours like look at this weekly blue. That's amazing. That's 5 weeks of weekly blue. That's amazing. Yeah, and look at this 50-day line slope. That's amazing. So this one is building construction. See, it's funny because um, like the builders are doing well, and yeah, so that could be interesting. HES, um, this one, commercial service leasing, construction, heavy construction. See, right? It's like look at the stocks that are like doing well right now. You know, look at this earnings. Look at this. Sales are climbing, earnings are high. Right. This one had a volatile Thursday. Friday, look at this rebound of 21 day. Right. So I like this stock a lot. Even though it's volatile, but like at least this week, right? But I feel like it's shaking out a lot of people. So look at this day of red, lower than all this week's like buying. That's amazing. So yeah, I really like this stock. Heavy construction. So another construction stock, right? So we want to look at SMCI. FICO is still at the top. Um, so I'm just gonna, yeah, FICO. This one, yeah, it's fallen a little bit, making new low. It's trying to hold right here, but I think it probably will fall. It's just look weaker than others. So this is so we look at chips now. LSCC. Yeah, look at the range, right? So many of these stocks have a big range this week. So right here, bounce of 21 day. Again, it closed a little bit weaker than I wanted to. 42% close range. That's not good. It's like I like to see it like at least above 50. So we'll see. Um, ALGM, that's the one that we mentioned earlier. Same thing, right? It's it's now this one is now below the 21 day. So this is the bad part. Like I feel like the Nasdaq is the one getting hurt the most too. You know, um, especially the really growthy areas. Um, but I think it's just not a good time right now. Still, it's just not showing strong enough action.
Mhm.
Technically, right? Fundamentally, these stocks are strong, but right now, short term, like again, we talk about this wall blue, right? Wall blue. Um, I don't know. They'll find support at some point. I don't know. We'll find it at 50-day, most likely. That's where institutional usually come in and support. So, but yeah, but right now it's just too much technicals going down right now. So, um, yeah, like I owned this before they all got stopped out. WNC also I think also kind of falling back. Transportation equipment. So this is kind of related to equipment as well. This one has fallen back. But it's not the one thing I noticed is like very orderly fall back. So I like when stocks fall back orderly. Like it's not like, except this day. It's kind of nasty looking, but I feel like this stock might have potential. So we'll see. It did close reverse on Friday. We'll see if that changed anything. Um, but I usually don't buy like especially on the downturn like this. Like I draw the slope. I like to see it climb back above the slope before I even consider it again. Um, so meaning like I don't buy on 1 day bounce when they're below that 10-day. Um, yeah. So again, we'll look at more chip stock BI Pi. Um, yeah. So Friday it didn't make a new low, so that's like finding support at 50. Like it's because it would have hit 50 if it wants to, but it didn't. So that's a good sign. So right now the 10 days kind of on this slope. So I have to wait till it pass this kind of level here, roughly, right? Like this level, roughly, to even consider it. Rhombus. So basically, what's happening in the chip is just the 50 days catching up to this guys, right? So that's really. But this one, look at this one. This one is so tight. Look at that. Like it just doesn't want to fall below that line. I'm not saying it wouldn't. It just hasn't yet,
Yeah.
right? And so this is really strong. Like Jim Roppel talked about Rambus. Um, so really, like on the weekly chart, look at this. This is like almost forming a tight base right here. That's amazing. So okay, BA, big guy. Big guy. Let's look at big guy here. Boy, look at this.
Wow.
It's not, it's a big cap. It's not gonna move fast, but it's a easy to hold stock, right? That's the good thing, I mean, like I said, um, I'm still holding this. Um, um, yeah. So we'll see. It's slowly sloping down, but it's still holding tight at this level. So we'll see what happens. Like, it should be ready to, like, it should bounce soon. It should. So like this would be a good stop level. Um, Clock another chip stop. So lots of chip stop at the top. They perform well, but like I said, they all they're all trying to catch up to the 50-day now. So some is gonna fall to 50-day, some is gonna fall slightly just above 50-day before it bounces again. So I do think, um, as we're looking at this chart, what I'm trying to say is, I do think we're not that far away from a bull market. Like, like right now, a lot of analysts are saying January, February will be bad. Okay, so March will be good. Okay, let's just say like January, February will go through the worst. But then I ask myself, how much is the worst, right? Like, how much more is the worst, right? How are these stocks going to react? I don't know. I can't see these stocks going back down to the lows. That's just me because I feel like their numbers are so strong fundamentally, and you know they already test everything they could, like technically. Like this is the test right here. We go back to Rambus. Some of them, like look at this test, right? These are big tests. Whoever hasn't sold here, like why would they sell now? This is what I'm trying to get at. You know, um, yeah. So the one guy, Jonathan Krinsky, he actually likes semiconductor at this level. So anyhow, so yeah. So it's again, I think not all are equal. So um, you have to kind of, because semiconductors are a really big sector too. There's lots of stuff. Oh, Mobileye is in this group. Interesting. Uh, yeah, there's lots of big caps too. Like Avago is big cap. Amba is big cap. So these ones that we're looking at are more of the junior guys, right? 2, 3, 4, 5 billion cap. That's why they're moving because they're the young guns, Um, Aeon, Aeon again, building heating products again related to construction. It's taking a break right now from this. See, this is all blue again, right? So there's something happening in the construction industry. I feel it's like they know something. And then look how tight it's trading right now. Like, I mean, it's not going anywhere, but again, that's because the market is like, right? Just like the market. But it's also not falling, like it hasn't fallen apart yet. It might. Like here's the 50-day line, right? So so I think the 50-day line for most stocks right now are critical. Like at least for those ones who have fallen to the 50 near the 50-day line, that's critical. Because if it fall apart here, yeah, the next line is 200-day, right? So it's a steep, another big drop here. So I'm not saying this guys won't fall apart. It could, but I don't know. We'll see. I will pay attention to these leaders here and see what's gonna happen. WFRD. This is again equipment. but this is in the oil and gas sector. Look at this. Like on Friday, um, let me just check quickly. USO. Yeah, oil price was down, right? But what did this stock do?
Mm-hmm.
It broke out. Like I couldn't believe it. You know,
Yeah.
so I had to take a position. I was like, this is weird, but but I have to take a position. So I did. I did. You know, um, yeah, that's what Weatherford. PFGC. Yeah, so this one is again, this is in wholesale food. I don't know what the story behind this guy is, but it's acting pretty strong. Like look like yes, it did kind of bounce off again. I like when the stock bounce off a moving average and
Mm-hmm.
close at the top. Um that's a good way to like especially in this time market, it's a good way to position because you're not buying at a high price, you're buying at after a test, right? And this is not going to be a fast moving stock, but it could be a nice more like a nice trend line like this,
Mm-hmm.
right? So and look at the earnings, it's doing well. That's why it's doing well. It's a boring sector, but or group, but this company is doing well. So um, yeah, so the solo stock is very volatile. I don't even know how to say it. It's just so volatile. Like array, holy cow! I think look at this 2 days of swing, right? Big swing. Um, So this day was 8% move. The next day, I mean, it didn't even count from the top, right? But it's 6.7% drop. It's just really hard to hold.
Yeah.
I think end phase is also like that. Yeah, look at this, right? Like it moved up and then it broke down so fast. It's crazy, you know. And so yeah, um, yeah, it's unfortunate. So right. Hello, we already talked about MEDP, Gil. So some of these are medical, like biotech stock are doing okay. MEDP. Again, there's a bounce here of the 50-day. So we'll watch, right? You see my alert right here. Watch what happens on Monday. If it
Mm-hmm.
bounce, if it make a new high on Monday compared to Friday, I will get in. Gil, same thing, right? Bounce off here. Again, I don't usually. So here I said like I'm more close to 10-day, somewhere like actually higher. Um, we'll see if this bounce back. But this is a nice option, like big cap too, right? So you see, like some of the money are hiding in these stocks right now. Like you can see, because there's just some of these are more defensive, but um, yeah. So this one's a new name, PWSC. This is an education stock. I don't know why it's moving so much. Like look at this option.
Yeah.
Uh, yeah, yeah, that's interesting. Like really strong fundamental. You can see that. But technically, it's super strong. Okay, on Friday, it came back down to the 10-day. We'll see what happens. It's a very, like, again, $20 stocks are going to be more volatile. Um, but it did break out. So now it's giving you another chance to buy.
Mm-hmm.
I think if there's a bounce here, like, might be good to buy. Like, maybe not a smaller position. But like I said, it's not very liquid. So, um, but yeah, this is the first time I heard of it. Uh, yeah, I'm gonna skip some of this. Okay, this one is industrial. We'll look at industrial because I think industrial are still strong. That's why I feel like Dow could bounce. I don't know. We'll see. So okay, so this one did break down below 21 day, close at the top. 50 days coming up to 200 day. So we'll see. If there's more weakness, they're gonna bounce for more. Like I say Monday, Tuesday. I don't know. It could fall more before it bounce. That's my only worry is that Monday, Tuesday could fall. So look, like we'll see, right? Again, Thursday and Friday I was very closely watching which stocks didn't fall much, and then we'll see if Monday, Tuesday if stocks don't fall much again. Like those are the stocks you want to like kind of look at right now, because I think it's kind of like a correction right now, or you can call it a pullback. So we don't want to buy any stock that's falling right now. It's just too hard to hold. TDW. Yeah, this one's looking good. Again, they have stopped going down, right? Look at this is the baseline here now. It went up and then look, it dropped, but it's not like a lot. Like it didn't give back much. So it's almost like they're building a nice base right now, right? Flex. Yeah, see, contract manufacturing. Look at this bounce. I like this is exactly what you want to see on the bounce. Bounce off a moving average, and then probably like I said, alert here on this near this level here, 22, 27.
So if it goes above that,
Yeah, then that proves the bounce is real. Just like here, right? You see this one actually make a new high the next day. I usually buy if it make a new high already. So if the bounce make a new high compared to previous day, I would buy that day. But because this didn't make a new high, right? It's this,
yeah.
so I have to wait one more day. Like usually in the morning, the next day, it will come above it. Like there's a risk that it will come back down by end of the day, but that's why you set your stops, right? Like you set your stop here, and like so your risk is this much.
Yes.
Your reward could be as high as this or more, right? So that's why that's kind of like at least 2-to-1 ratio right there.
2-to-1, yeah.
At least, yeah. If it goes higher, then you're happier. And look at this stock. That's what it does, right? It kind of formed this like formation. It just keep bouncing, right? That's kind of what you're hoping for. Yeah, Flex is very strong. It came up. It's just show up in the last few weeks, like from the bottom came up. We are TV. This is also oil and gas, I believe. So, oh no, this is paper product. But this one pulled back quite a bit. So now it's bouncing off the moving average 200 day. Look at that. Again, here it did bounce off, but it's slightly below 10 day. Again, I don't usually buy below 10 day. Like I have to see it go above 10 day. Because the downtrend of the 10-day slope could be like this, and it could go down like this right next day. It all depends what the market do, honestly. If the market can bounce back, it'll probably push through. Right now we really want to look at stocks that are even better than the market, because if we follow the market, if the market go down, we'll suffer. We need to find stocks that are even better than the market. That's why when I look at like Boeing, look at this, right? Friday, it just won't go down no more, right? Caterpillar, I know these are the big guys. This is where the big money is hiding right now. Look at this, Friday down day. Look at it. It just doesn't want to go down. So at least this one, the worst case scenario is like you just won't lose much or quickly. So that's what I'm like. I shouldn't be buying stocks right now just because technically it's more bearish. But if you do want to, and you feel like there's so I tell you why I feel there's a potential bounce. And I was surprised when I looked at this. So we'll go back to my chart tool here, and I'm going to bring up the 3-day report. And here you go. And I'm going to show you. So the 3-day report is saying, so this was a false number. This was July 12th. We had 71% bounce. That was Tuesday, I believe. July 12th. Let me jump back to S&P. What is it? Oh, July 12th is Monday. So July 12th, Monday, it has a 71% percentage of stocks that were bouncing from a 3-day. That's really high, which is good. But then the next day we know what happened. It reversed, right? So then what happened? 68% of them, of my analysts, are now on the downtrend, and it continues. But what happened Friday? I was surprised because it was a down day. But what happened? 56%
Wow.
has rebound, right? And I'm actually shocked by this because I didn't think it would be that high of a number. Like you go back, look at this 30, 30. This one's 77. But those are has some moves there. But this one is so weak, but yet it bounced on Friday so much. So I don't know. I feel like the market is at a point where some stocks will keep falling and some stocks will resist that falling and maybe even go higher. But again, that's why if Monday and Tuesday is negative, fine, But I just hope the stock that I pick will hold. And then after more selling, it's gonna bounce. Like I feel like this selling is quite extended right now. Like 8% drop in S&P from the Tuesday's high is quite severe. So I think sooner or later it's gonna bounce. Like maybe like I said, maybe Monday, Tuesday might be another 2 days of selling. But I feel like we'll see. Like again, we'll see if we can hold. I don't know. I don't want to give too much hope right now. I need to stay more focused on risk management. Um, so if you do have a stop, just make sure your stop is really tight, and that way, and also position you don't want to go all in at once, kind of thing. So just kind of build on it, right? So that's how I play it right now. So instead of yeah. Um, so what did I want to say? So that was the reason why I feel a little bit more optimistic seeing this number. And like I say, you can see many stocks are closing near the top of the range. So um, let me see. So the other stock that I want to talk about, MODN, this stock is surprisingly doing well. Like look at this pattern, right? Like it's kind of moving up. It's accelerating the pattern. That's what I'm saying. Um, like going upward right now, the trend. So look at this trend line. It's like crazy. This is I still don't know what they do. Model N. Let me just quickly click on their website here. I can't remember. I remember hearing about it before. I just don't remember. Uh, MODEL. I don't know why the link doesn't work. So I'm just gonna type in. Do you know this stuff? No way.
No.
Yeah, I heard it a few times, but I always keep forgetting what it is. But yeah, okay, we'll see. Cloud revenue management. So it's a software company in the science and high tech sector. Okay. So it's very rare for software companies to do well. Um, at least right now, right? Like growing really well. Like Box is one I just mentioned earlier. This one is another one that seems to be doing. Like if I look at the forecast, let me see. MODN. Oops. Oh, sorry. I have to change back to growth. Okay. I had to find a stock. Yeah, 57%. It's pretty good, right? So we go back here. See, 45, 44, 11, and then it's going to be 57. So it's going to be roughly 20 cents. So yeah, so it's doing well. Uh, you can see right here, wall blue, right? Even this week, right? Broke out again from this tight pattern right here. Very tight pattern. So this is good. Like small cap, not very liquid, but these are all like young guns, I think, right? These are keep making higher highs. Here's higher lows, higher lows. But it feels like it's just riding this 10-day right now. So I like it. But yeah, like end phase right here, we talk about that. There's a lot. I don't know. I feel there's lots of stocks doing well. Um, like better than I thought. Like even as after this week, right? But of course, a lot of stocks pull back. Um, so, but then there's a lot of stocks, like I said, that kind of when this one closed at the bottom. I don't like it in that sense. But it hasn't broke to new low since Wednesday. That's the reason why I feel like this stock is very choppy though. Like this again, this is biotech stock. Um, this is the breakout point. It hasn't moved much since the breakout. It's kind of below that line again. But there's a lot of people talking about this, because it's starting to make money. So I don't know. It's just hard. Again, we'll talk about box. Any other stocks you want to take a look at?
No, I was mostly out after the Fed.
Yeah, yeah.
So yeah, it's interesting to see that there's still strength.
Yeah, like I was surprised. Like I thought that after this week, a lot of stocks just gave up, but not it's not true. Okay, so I don't have anything new from Twitter. I think a lot of people were starting to give up. Like I saw on Twitter, this guy that normally tweets a lot, he like, I'm gonna take a break. This last 2 weeks, I'm gonna take a break from Twitter and stocks. He said. So it's kind of interesting that people are starting to give up, and we'll see. I don't know. The market is always about psychology, right? So um, like I feel give up too. I feel like I have to give up. But when like I said on Wednesday, I was a lot of my stocks were out. But Thursday and Friday, I start to see like stocks resisting the downtrend, and I find that really interesting. And again, these are not even stocks that I was looking at before, right? Like box, right? I was like, it's like moving up this week, right? And it's holding. Look at where it closed on Friday. Like it's nice, right? On the down day. Oh, like this one, it came back down, but during the day, it was like really strong, But by the end of the day, it closed halfway. But to me, I can see lots of people still buying this stuff, but it's moving higher and higher, so there's starting to be more risk. Um, Again, the big guys like Cat, right? Everyone's talking about this stock right now. I don't know. I sometimes I don't like when many people talk about it because it's gonna have one of these days, like when someone's just gonna manipulate the market,
Mhm.
and I don't know if someone can. Like this is a pretty big cap stock, so we'll see. But I don't like it when too many people talk about it. I think like on Friday, at least 3 analysts that I heard on CNBC talk about it. It's like so many. Um, but it is like really strong, right? Like it's like see this breakout level right here. Yeah, slightly higher. This once it break out, I don't think anything will hold against it. It's just gonna fly after that. And this is wall of blue, right? So those see the one thing that I noticed is we see lots of wall of blue now in the last 8 weeks, right?
Mhm.
We
Mhm.
see many of this stuff, this leader stuff, so called, have lots of accumulation, like 4 or 5 out of the last 8 weeks being accumulated. And then the down weeks, look at the down weeks, like so low the volume. Um, so that's what like makes me think like don't be too bearish. I feel like I know the market is bad, but I don't know. We just have to pick our fight. That's all. Like we can't pick stocks that are wishy-washy. Like we have to be like super
Mhm.
precise, right? And even if you're wrong, we have to make sure your stops are tight. Like so you can, let's say, um, I look at model N for example, like this, like for example here it broke out right of this range $40.
Mhm. Mhm.
It is at the 10-day right here. Is exactly at the 10-day level, and so for example Thursday I got in, so I don't remember what price, probably around 41 maybe. But like I said, you give it $1 stops, that's like 2.5%,
Mhm.
right? If it does cost back then you lose. But if it continue to run, you can easily make 10%, and then that's like 4 times your money, So
Mhm.
four
Mhm.
times your risk level, right? So to me, stocks that are resisting the market are the ones that are going to move fast as soon as there's a bounce, right? So
Mm-hmm.
it's more of a trade right now. Like that's the thing. Right now, we can't think long term. It's just too hard to think long term. Like especially given the cloud coming in January and February. The Fed not going to pivot. You
Mm-hmm.
know, let's just say inflation numbers continue to go down. Market might jump on those news. Uh, we'll see. We'll see. Like it's very interesting right now. Let's look at U.S. dollar, UP, because a lot of people say, look at this trend. It's falling
Yeah.
apart. It's
Mm-hmm.
falling
Mm-hmm.
apart. Now it did come back on Thursday and Friday a little bit. We'll see. Because if this continues to fall, right, it's good news for world economy, right? So that's why we don't talk much about world economy, but look at Chinese. Like this is the Chinese internet. Look
Mm-hmm.
at this. Wow, it gone up so much, and look how tight it's trading. This is tight. Like look at this range, so tight. Like they're out of the woods. This is the 200. They're way above it now. Um, I don't remember all the index, but let me jump to my index list here. We should look at some of them because I feel like so this is KWeb. Um, we're gonna look at IGV. Let me go down here. Mexico. Okay, pull back. Has this run and then now I pull back to 200 a day. Okay. Germany. Okay, this guy is also pulling back to 200 a day. So some of them pull back this way. This one is okay. This is the big one. World country, right? World all country except US. Okay, it did pull back. Huh, interesting. So this week a lot of them pull back. Very interesting. Um, yeah. 10-year note. Okay, let's look at this. This one is hard to see. Let me jump to it now. Zero TNX. Okay, this one. There you go. Okay, it's still on the downtrend. See that? And this is what I'm saying, right? If the 10-year
Mm-hmm.
note continue to go down, it just means they're not worried about inflation anymore. In fact, they already peaked right here.
Yeah.
Exactly like this is the bottom, right? Where the market bottom, October 13th. So, but that's what Eric Johnston is trying to kind of say is like market don't care about inflation anymore. It just cares about how the interest rate is now going to hurt like a lot of companies.
Mm-hmm.
Um, and and here's the thing. Let's jump to Apple for a minute. Look at this. It's like coming back to the lows, right? And that's the bad thing.
Yeah,
You
that's
know,
the thing.
that's the bad thing. Look at this. Like it completely fall apart this last few days.
That
Um,
can move the index. This is the guy.
yeah, this is the guy that moved the index for sure. So, so the problem is, though these old stocks, the old leaders are still falling. You know, we have Apple near lows, we have Tesla making new low. Um, us look at those guys. Microsoft, wait, this one looks okay. This one is still on an uptrend. It's actually not bad, surprisingly. Google, okay, Google has kind of fall back as well. Not near the lows yet. It's kind of like somewhere two-third down. Uh, Amazon, I think this one, yeah. See, look at this, not good. Near lows, right? Um, I haven't. Yeah, Netflix got burned, right? On the other day after they report the ad video is not bringing in as much revenue, which I kind of expected. Uh, but this one is still at a higher low. See, higher low, higher low, higher low. But we'll see. If it breaks down and goes to its line, then might be bad. I know Roblox got burned also, right? They announced their revenue probably not as good. Subscriber spending money, so making new recent low, not the all-time low. All-time low is right here, but it's not looking good, right? So like if we look at art, let's look at art because that's the one. So this is, yeah, they make a new low, right? Look at this. Yeah, just like Tesla is making a new low, art is making a new low. It's just not over yet, and I don't know when this will be over. And this is, this is exactly what's causing the market to go down. Is this stuff, this type of stuff, stocks that have no like, and that's, it's not saying all of them, but most of them have no earnings and stuff, right? Like, or good earnings. Um, but even Apple and Tesla, both of them have earnings, but they're slowing down, right? So Apple, we hear their production level not good, so they're not going to sell as many phones. Tesla, we hear that they're even providing discount right now to sell the inventory, but that's not good either, right? So it's just so many. It's just not going well for these guys. And out of all the sectors, like the question is going to come down to which one already pricing a recession. I think that's the key. So um, again, I feel like even coming back to home builders, right? Let's say Monday, Tuesday, they come out with really bad numbers. If they don't go down, I'm going to add because it just shows that they're already pricing the worst things. You know what I'm saying? And so Thursday was when DHI comes out and say, "Hey, DR Horton, right? They're the largest builder. They say, oh, things are not as good," but then their forecast is not as bad either. So that's why it jumped back up. So so like I say, the worst is already behind them. So if Monday, Tuesday, if those numbers again show that the numbers are bad and market reaction is actually the opposite, I would jump again. I would buy into this again. I would add more shares. So that's I think this one is my probably number one, like kind of like what you're talking about. A lot of people are looking at this right now, and so there could be a momentum play here, and it's counterintuitive, right? It's like, why would anyone buy this? So this doesn't make sense. If we're heading into recession, why would anyone think the housing stocks would go up, right? But that's the thing. They're on the lowest, like that. At least that's what I heard. They're on the lowest supply right now. So meaning they have to build up supply soon, as the supply goes down, because otherwise they have no more house to sell. So then they have to build more, and then that's when you know, yeah, we'll see. Because a lot of material has dropped too, right? So that's probably why long term is a good thing for them because it's just like any infrastructure play right now. So the other one that I don't pay attention to that Jim Roppel talks about is gold and silver. Um, it is in the uptrend. You see, higher low, higher low, higher low, higher high, higher, and it broke out, right? But it's kind of sitting at the 200-day line right now. Um, but it has broke. It has kind of this is on the uptrend now. So he is long on, like he doesn't long many things right now, like, but he is building position in this. Same thing with silver. Um, Look at this. This one is even nicer. This uptrend. So because again, recession is coming. U.S. dollar is going down. All those are good things for precious metals because people want to hide their money somewhere.
Yeah.
Uh, this trend is really strong. Look at that. Wow. Yeah. I should probably pay more attention to. Like, there's no fundamentals. These are like none of those companies are making money, but it's a momentum play, right? So, um, yeah, and so a lot of people compare to, like, I didn't save it, but on Twitter there's lots of chart comparing 2008, 2002. I don't know if you've seen it before, but they say it's very similar. Like, if I go back, wait, again, the people who lay it on top of each other on S&P, and they say that it's very similar. And they're saying, so this is 2008 December. Yeah, we bought them in March, right? So they're saying, look at this, right? So here's the peak, right? Right here. So they're saying when people overlay this graph versus 2022, they're saying we right about here right now, like right before this two big drop. I don't know. We'll see. It could happen. So that's why this is a big drop. We'll see. I don't know. I think like for this to happen,
Mm-hmm.
um, we already know the Fed is gonna keep restrictive policy. The question is the economy gonna collapse? No one really know the answer, right? He even said in the meeting that no one's gonna know that. But some people think it will go that way. Like even Siegel said now he feel like more like he'll be more negative, right? But then eventually it'll come back. Uh, but is it gonna? The question is it gonna drop 20%? So right now S&P is at 3,800. So if we drop 20%, it'll be roughly to again 3,100 to 3,000 from this level. So it'll be like this, right? That would be bad. It will definitely, if you're in the market, that would be like pretty bad for a lot of people's in retirement savings and stuff like that.
Mm-hmm.
And just so we know, Nasdaq is going to close at near 30%, right? Like, let's say we stay at this level, it's down, I think, 32% right now, year to date. So if it fall like so, this is this year. I think we will stay around this level. I don't know, it might go down a few more percent, 35% maybe. And then next year it might go down lower in the first couple of months. Then it'll be bad. Yeah, we'll see. Yeah, unfortunately, like we'll have to see if there's a relief rally right now. 8% draw is significant, like from peak to trough, like from like for a week kind of movement. So every time we had that, we did have a bounce. So if I go back here, let me, yeah. So here we have this. Is this right? Oh, this is Nasdaq. Nasdaq. I guess it doesn't matter, but S&P here, see, we have this 4-day drop, it bounced. But this is the most recent rally. But even here, yeah, 4-day. Okay, that one's not much of a bounce. This is more severe right here. And then you have a bounce. It's more severe, and then you have a bounce. So this is like this slope is pretty straight down, right?
Mm-hmm.
So I don't know if it will continue. I feel like this should be a bounce, and then it might even come back to this. If it comes back to this 200-day, it will be the third time now. One, two, three. If that happens, I'm just saying, and then go down. I don't know. Too many possibilities now.
Mm-hmm.
But I think short term, I feel like I said, based on Friday, based on the 3-day report, it seems like most stocks have exhausted its selling. Not all of them, but more than half, 50%, more than 50%. But we'll see. We'll see what happens. If Monday opens like weak, uh, then I would say I discount this, right? I would say no, because like I say, normally if it bounce, there's no hesitation. It will bounce like even opening strong, like strong as in like it'll be green, right? Um, there should be no hesitation, is what I'm trying to say, right? So Monday future morning,
Mm-hmm.
it should be at least positive. I'm not saying it has to be like up 5.5 or 1% or whatever, but it has to be positive. If it's not, then I would say this will continue a little bit more down for sure. Yeah. But then like I say I would look at my stocks. So that's what I do, right? Like every morning, index is one thing, but their stocks is very important. You look at the stocks and you look at them. Are they going down, especially at the open? I find it's very important. Are they going down as much as the index? If they're not, that's a good sign, right? And when you look at the leaders, that's a good sign. Um, or stocks like let's not call them like just all leaders, but the ones that are resisting the downtrend at least. And then you can reassess based on that. But yeah, but right now we are kind of, it's like Jim Roppel said, you might pick one stock that move up, but you pick 4 stocks that go down. so
Yeah.
so it's the odds are against you is what he's saying, right? It's just very hard environment right now. But like I said, I wouldn't discount a Santa rally is all I'm saying. You know, because the market now, here's the thing, the market already knows the Fed is wrong now. Like there's no doubt about that anymore. The inflation is rolling over.
Mm-hmm.
So if the market knows that, then they know at some point for sure Fed will return their tide on interest rate. The question is not that no more. That is going to happen regardless. Whether it happens in March, June, or September, it will happen. The question is this economy going to roll over? And no one knows the answer. And most people do think it will. That's the thing. I think 80% say it will recession, or even 90% say it will recession. But the question, like to me, is not so much like a recession. It's more like how big of this recession, right? If it's a
Mm-hmm.
mild recession, I think some people even say like if employment jump back to like 4.6, like 1 percentage point, it won't even make a dent. Like it'll be okay, you know. But if it roll over to like 5 or 6% unemployment rate like next year, then
Mm-hmm.
that's troublesome, right? Then that will hurt consumer um, spending and all that stuff. So I think that's kind of the question that no one knows the answer. So from that perspective, I'm just thinking out loud. Again, I know I'm probably wrong, but I'm just saying, like, just throw it out there, right? That um, I noticed the market, well, beside this time, I think this time was the most severe. Um, we have 3 big day down, right? Um, beside this time, every single time, the last 2 months since October 13th, the market has very quickly discount what the Fed has said, you know, and so like I say, I wouldn't be surprised to see a bounce. Like we might even close the year at 4,000. Like that'll be a big surprise for most people,
Yeah.
right? It will be close at 4,000, and then everyone will be like, what's going to happen next year? Are we going to roll back down? Which is what most people would think. But the thing is, who knows? There may be some surprises we don't know yet. I don't know. Maybe earnings. Here's the thing. Maybe earnings not going to be as bad, right? Everyone's saying, oh, it's going to come down at least 10%. What if it doesn't, right? So to me, there's more, like, I guess this is where I'm saying there's more surprise to the upside than downside right now. That's how I feel, despite what happened this week. I hate to say that, this is the fact. What I'm saying is just an opinion, but um, I feel like there's more surprise to the upside than down because everyone expect this to go down, and so I don't know,
Yeah.
right? Like most people, like you and me, like I say, we all most people probably out by Wednesday, and then Thursday even drop more. Friday drop more. Again, depend which stocks. Like some stocks are resisting, like I said, Thursday and Friday. That's why I find like very interesting, right? Like why would they even resist at this point? Um, so but I'm not hoping for a big game. That's not what I'm trying to say. They're probably just gonna be like very jump like range bound, right?
Mm-hmm.
At
Mm-hmm.
best, range bound. Like I said, the 200 day to cross this, it needs something. The Fed need to say something. I think that's what will happen. The Fed need either there's something that, for example, there's some data that comes out between now and February that really says, "Hey, Fed, you are wrong." Then
Mm-hmm.
like for example, CPI data, let's say, go down even more faster, right? Then people say, you know what, Fed is wrong, right? The market gonna discount that. It's like I don't care what the Fed say anymore. The market gonna move ahead and jump because the Fed is wrong. And yes, they might hurt the economy, but if the companies are still showing great earnings, hey, at least the numbers are not showing that,
Mhm,
right?
mhm,
Right now, market is going down this last week because after what the Fed say, and also because people think that there is a recession coming very soon. So again, it's kind of like a timing game now. That's why like Eric Johnston, I'm not saying he's not right what he
mm,
says, but I just feel like um, there's a lot of assumption, right? The four assumption he said, so yes, Fed rate will be at 5, okay, like
mhm,
but everyone already know that. So meaning there'll be 2 more hikes. But what if they don't? Again, this is what I'm saying, right? What if they don't hike rates? What if they're wrong? They know they're wrong. Earnings come down. What if this is not coming down as fast as they say, right? So these are
mhm,
all assumptions, right, that he has right now. And seasonality, okay, honestly, like, yeah, that could happen. Even though he's right, the statistics show anytime you have a bear market, 100% of the time is down, but doesn't mean it won't happen. It just means that odds are 100% down. Economy slowing down. Yes, this is for sure.
mhm,
But again, this is related to the earnings, right? So the liquidity is also an issue, but I don't know. Like, what if like what if I don't know. What if companies like Caterpillar are going to grow, right? And I don't know why they're moving. I kind of know, but at the same time, like what if this company, this is a big cap. What if this company continue to grow? Um, the prospects are good, right? Um, so then it's not as bad. The corporate America will do well because they can grow. So, but I think the 2022 is a year that teach you the lesson, and this is um,
mhm.
the lesson is don't fight the Fed, right? That's really what it comes down to, and it's been true the whole time. And we talk about this, right? Even on Wednesday, like the Fed just trying to knock this market down constantly. So that's why I'm saying if we look back at the index, the Fed always want to knock down the market, knock down, knock down, knock down, knock down, right? So at some point, it's gonna get knocked down. It's not gonna get knocked down anymore. That's when will that happen? Is when the market know 100% Fed is wrong and the data is enough to prove that they're wrong. Right now, the Fed still don't admit they're wrong at this point. Just like Professor Siegel said, right? They won't admit it that the inflation is over. But so Professor Siegel said that inflation is over. That's his words. So the Fed, any more increase in rate hike will just ruin the
Mhm.
economy. So um, and I think we were thinking about that same thing here. We were also thinking about that here. We were wrong. The Fed just doesn't want to admit they're right. They're wrong, and they will continue to do that until there's some like just like some numbers to show um, that they're wrong. And who knows that how long that will take? It could take a few more months. Uh, but I think everyone, like I say, I feel like a lot of people are giving up right now psychologically, especially this is the end of the year, and we'll see. We'll see. Yeah. So we probably won't be chatting for couple more weeks. We'll see.
Mhm.
Take a break, and probably even New Year, take a break, and then we'll see how the first week of New Year turned out. Um, Again, it's unlikely much will happen between now and then. I'll be surprised if it does. Um, Again, I still feel there's more surprises to the upside than downside right now at this moment. But we'll see, right? Like we'll have to look at it day to day. Um, and I know that you know yeah, we'll see. I don't want to jump to conclusion, like, but I know if there is a center rally, they can move like easily 10%. Let's just put it out. And even if they move on low volume, right? Because there's no liquidity. So not all stocks will do that, but I think some stocks will do that. So we'll see. That's why I'm only picking stocks that are very resistant to going down right now. Like it just doesn't want to go down. Those are the ones that I look at. And also where have a very tight stop that I can put in as a stop. So I'm not gonna buy extended all that stuff. So um, yeah. So we'll reconvene probably after the new year and see how things go. And then yeah, we'll chat online as well.